Well, first, I think this represents a delivery on our strategy, which we stated to focus on acquiring royalties and streams over producing mines, so that we're very close to generating income, such that they would contribute in the short term to our revenue profile, and also diversify our revenue profile in the short term. This deal really delivers against that strategy.
Hello, you're watching Proactive. Joining me is Ecora Resources CEO Mark Bishop Lafleche. Mark, very good to speak with you. You've announced an acquisition today in the copper space. Could you talk us through some of the highlights?
Great to be here and great to be speaking about the transaction. Well, first, it's a fantastic start to 2025 and really builds on the momentum of a strong fourth quarter that we saw last year. So the transaction itself, we've acquired a producing copper stream on Moxico Resources' Mimbula copper mine. The mine is located in the Zambian Copperbelt province, and we acquired the stream for a total consideration of $50 million. The acquisition cements copper at the core of our portfolio, and the stream has been structured to really front load the entitlements to the first 7 to 8 years of the reserve-based mine life. The consequence is that the stream is expected to deliver maximum contributions to our earnings profile in that period and contribute to being, number one, materially immediately accretive to our earnings and free cash flow per share from year one onwards, but also really drive earnings growth in that short and medium term period.
Ecora has the ability to handpick projects. What made this one so attractive?
Yeah, there's a lot to like here. Well, first of all, it's a producing mine, so there's a track record of production. It's in a prime location. It's located, as I mentioned, in the mineral-rich Zambian Copperbelt province. It's a very high margin mine, so in other words, very low cost, and that means the ability to generate very strong cash flows throughout the commodity price cycle. The mine has an 11-year reserve-based mine life with extension potential. And currently, the Moxico team is undertaking a brownfield expansion, which is expected to result in a fourfold increase in production from 14,000 tons of copper last year to 56,000 tons of copper once the expansion is completed in 2026. And last but certainly not least, in our view anyways, this is a really exceptional management team at Moxico. They've developed this project from concept. They've taken it into production. They have a proven ability to develop projects here in Moxico, but also more widely. You have folks there who have an excellent operational track record at some of the largest and most diversified blue chip miners. So we mentioned it last, but it's a really strong point, the Moxico team.
Mark, it looks like an interesting stream structure. Can you tell us more about the stream entitlements and why the transaction has been structured in this way?
Yeah, well, as I just mentioned, the stream has been structured to front load the income to the first 7 to 8 years of the reserve-based mine life. So the stream rate is 4.7% on the first 15,000 tons of production. The stream rate on the next 15,000 tons of production reduces to 2.5%. And then incrementally, the stream rate on any production above 30,000 tons per annum is 1%. So the impact on a blended basis works out to being approximately a 2.3% stream entitlement. But of course, the volumes are much more weighted towards the first band of production, such that we expect the impact will be a stream that has relatively lower volatility as a result of the natural fluctuations in a mine, but also an expected ramp-up profile as the mine completes phase 2 expansion. So to put it in other words, last year the mine produced approximately 14,000 tons, and on the expected volumes this year, we anticipate stream EBITDA of approximately $5 million. Once the mine is fully ramped up following phase 2, we expect that stream EBITDA to increase to $10 million. And that ramp up, of course, represents a fourfold increase in production. So you can see that the stream is primarily the stream is far less sensitive to some of the other instruments we have in our portfolio to the production profile and the ramp-up profile. The real benefit, though, ultimately of front-loading these cash flows, as I mentioned, is twofold. I mean, the first is to really contribute to our short and medium term, or the front end of our organic growth profile. And number two, of course, is the stream cash flows alongside with the cash flows generated from our wider producing royalty portfolio will contribute to a material deleveraging profile in the next 12 to 24 months.
Mark, how have you funded this transaction?
So we've funded this transaction with a mix of cash on hand and an upsized debt facility. We've upsized the revolving credit facility to $180 million. And at the same time, actually, we extended the maturity of the facility out to 2028. So following the transaction, pro forma net debt is expected to be $126 million. And if we run analyst consensus prices today, by the end of next year, that would imply net debt in the range of $75 million. So in the next foreseeable future, we'll of course be focused on deleveraging, but with the upsized facility, we of course have the capacity and the capability and the flexibility to acquire an addition high quality producing royalties if the opportunities present themselves.
Mark, how does this play into Ecora's growth strategy?
Well, first, I think this represents a delivery on our strategy, which we stated to focus on acquiring royalties and streams over producing mines, or that we're very close to generating income such that they would contribute in the short term to our revenue profile and also diversify our revenue profile in the short term. This deal really delivers against that strategy. As I mentioned, it's expected to be accretive to earnings and free cash flow per share in year one and onwards. Ecora already has one of this royalty sector's leading copper growth pipelines, but we think this deal really enhances that pipeline by adding growth really at the front end in the here and the now. And more generally, if you zoom out, copper now represents just under 50% of our portfolio's estimated net asset value. So copper really is, from a value from that perspective, the core commodity for Ecora, and with base metals just under 80%, this transaction really just cements that base metals exposure with a primary focus on copper. And then last, we've already guided that we expect underlying production volume growth from the wider portfolio in 2025. Of course, adding Moxico just adds further volume growth this year and in the short term.
Mark, congratulations again on that deal. I hope you'll keep us posted on any progress with it. Thanks for speaking with us today.
Yeah, pleasure. Thank you.
That's Ecora Resources CEO, Mark Bishop Lafleche.